Hey everybody, it's Uzi over at the Option Selling Institute. In this week's video, I want to go over a couple of trades from start to finish, show you what I was looking at, how I chose the option strategy I did, and go over some of the other results summary in the room from this past week. Let's get right into it and show you the slide I got for you. So as you can see, we closed 9 trades for winners this week, or expired. So if we can let them expire, we will save a little bit on the commissions. But we did close or let expire 9. You see here, every single one of them was winners. Thank the good Lord. And we opened 4 new trades during the week that have distant expirations. Some of them down to December, and some of them in just a week or two. We also had some new members join our team, which is always great. Always love to have new people show up, and hopefully they can start making money with us. So we had closed 3 regular type of trades and/or bonus trades right here. You can see we did a 50%, 60%, and 100% winner. The longest duration of trade there was the soybeans trade. I'm going to go over that trade in a few minutes. It was a great trade. It was a strangle. We were in it for 22 days. What was nice about it was the setup, and 21 days is a very short period of time for a futures options trade, and we were able to keep 100% of that premium, which was phenomenal. Some guys chose to get out at 50%, and that's their prerogative. That's great. I like to when I can, I like to let it go to 100% to keep the full premium if I can. And we had a number of earnings trades. We traded some of the big names. We traded IBM, Tesla, Lockheed Martin, and we traded Seagate, as well as a bank, Capital One, and we traded Tractor Supply. That's a retailer. Nice business. I have one right near my house. Love it. They have a lot of great products. And in that particular trade, which we're going to go over, we were able to actually make more than the initial premium received. And I'll go over that with you, which was, we're going to go out, actually, we're not going to go over that one. Sorry. But that was a trade where we actually had a put debit spread and a cash secured put. Okay, we closed both of them. And by selling the put debit spread, which was part of that 111, we brought in extra profits. So sorry to confuse you there. So that's that. One trade, which was STX, lasted only 15 minutes, and that is a trade we'll be going over. That was one of the highlights of the week. And all right, let's get right into it then. So like I said, the first trade was on STX. This was what's called a post earnings trade. So we trade pre-earnings and post earnings. I didn't like the setup. It didn't pass the test for a pre-earnings trade, but it did set up nicely that morning when they reported. And what was going on was SDX released earnings, the stock fell, and it fell pretty hard. And after I saw what I saw setting up in the chart, we decided to sell the puts, which I'm going to go over with you soon. But we sold some puts. Yep, that's what happened. We had to get that and got toward the 200 SMA. It rallied off the morning print, and then we were able to close it very quickly. One of the fastest trades, really, in the last couple of weeks. Here's the setup. So we had this gap down in the morning. And again, this really didn't pass the test, though, pre-earnings for the screening that I did on it. But once it opened up and it was trading pretty harshly, here's the 50-day moving average, and here's the 200 below. So it was heading toward the 200. It had already blown right through the 50-day moving average. And, it was looking pretty ugly. And again, we had no position, so we had no risk either way. But watching it for a few minutes, I saw what I wanted to see, and I did have some Fibonacci's drawn on the chart. And I'm a big Fibonacci guy when the setup is just right. And what we had was it coming all the way down to the 61.8. I saw a little bit of a bottoming tail coming in here on a wick, and that's when we decided to sell puts. I put the alert out. I don't know how many members were able to get in. It was pretty quick, as you can see. This reversed pretty quickly off the lows right here. So not sure how many members were able to get in, but you can see it wicked, and then it created a pretty nice sized green candle on the way up. Now they had an opportunity to get in on this basing formation, so I'm not sure again how many got in, but whoever got in, this is when we exited. As soon as it made this rocket right back up, it was trying to get to these pretty exhausting levels at the 50% is when we sold. You can see here's 5, 10, 15. So right between these two candles are when we sold. And that netted a really nice profit, which I'll go over the math with you next. So the math behind the trade is pretty simple. We sold to open the weekly, which were a couple of days out, 100 strike puts at 39 cents. Here's the confirmation up here for transparency. I always show a copy of my trade. Okay, so we sold them for 39. We bought them back for 15, which is you can see right here. That equals $24 profit per contract, and it is 62% in 15, 20 minutes. Real nice trade. Real nice trade. Wish they were all that easy, but they're not. If they were that easy, I think everybody would be doing it, right? So the next trade is that soybean futures trade I was telling you about. I like to trade futures options. The setup has to be just right because not that they're any more risky than any other trade, but if not managed properly, they can definitely start moving against you quickly if there's a big move, either up or down. I don't oversize on futures options positions, and yeah, let's get into what I was seeing here. Now, this particular setup was nice because we had the soybeans coming off of some lows over here, and it started to create a series of higher highs, as you can see. Okay, so the very first one or two higher highs was what I was really focusing on, because I said, you know what? Here's where we entered the trade. As you can see here, here's the entry right here, this highlighted area. Now, I knew it was in the middle of a couple of day pullback already, and that's when I decided to sell the puts. I'm sorry, the strangle. I knew that it was in the midst of a little bit of a pullback, thinking it's probably going to come back to the 50-day moving average. So I looked and I saw, okay, where do we have some support? I could have chose this one, but this was the most recent, pretty major support line where it spent any length of time. So I figured, let's go below that one. And I had a nice eye on this particular level here. So that's the level I had, as far as where I thought it might go to if it did fall. But I wanted to sell below that. So we sold the 950 strike put, and then on the upside, I basically just looked a little bit higher up and said, where's an equal move up and equal move down, and we chose the 1160. So let me show you the math behind that one. Bear with me. Here we go. So, like I said, it was a 21-day till expiration trade. And we did let it expire. So it took 21 days, 22 days for it to actually, show up in our accounts as a complete trade. Now, soybeans have a 50 multiplier. So when we sold the strangle, we took in a premium of 2. 2 times 50 is 100. And so that's what we received. We received $100 per contract. Now, depending on how many contracts someone wants to do, you do 10, you do 20, or you do 1, you were able to keep it all. But the nice thing about this trade was, if you do the math, $100, and it only used about 1,100 in buying power in a regular margin account. That's a 9% return on risk in 21 days. So in less than a month, we made 9% in a fairly stress-free trade in the soybean futures. Just stuff I like to do. And again, the futures, every chart has to set up just right for me to put a trade on it, but especially with futures, and that one was a real nice strangle setup. All right, let's get to the next thing I wanted to show you. So, we've grown since we started the Discord, and we've got a good amount of members. And I share every now and then some of the feedback that we're getting on WAP, which is how you sign up. And I just wanted to show a couple of recent reviews, which they're coming in almost every couple of days. So this member says he's been with me since near the beginning of the Discord, and he really has, and he's been taking almost every trade. He says that there's tons of great options trades and varieties, and we do mostly sell, but there is some buying, which is accurate. There are times when we'll go long in a spread sometimes. Yep, spreads, iron condors. And what he says here is that it's true. Everything is filtered. Everything is researched carefully. That's why we have a 100% winning streak right now, going for 12 weeks, 16 weeks. All verifiable if you want to come in the room and check us out. This member, he's been here for a couple of months now. He says he's pleased, which I'm glad to hear. And like myself, he's actually been involved in the industry for a good amount of years. I think he's a certified financial planner, but he also does some trading, a lot of trading actually on the side. He's owned several programs in the past or been part of, I guess he means discords, and it's all just hype, out, to make money. He says, I'm different. If you follow my ideas, you will make money. So this is not me touting what we're doing. This is some of the people in the room every day in the trenches with us, and telling you what they see and how they feel. So with that said, I'd love to have you check us out. I mean, I'm giving a 3-day free trial still. Sign up over here at the WAP location. You can find me on Twitter if you need to reach out to me. You can sign up. It's 3 days free. If you stay on, you'll start getting charged depending on what level you want to stay at. And if you don't want to stay on, that's up to you. You can easily cancel and you won't be charged within the 3 days. All right. So if you have any questions, post them in the comments. If you got something out of this video, please like and subscribe. Appreciate, and I read all the comments. And let me know how I can make these videos any better. I'm always open to positive construction, criticizing, critiquing, I should say. So with that, this is Uzi. I'll catch you guys on the next video. Have a great trading week. And once again, thanks for watching, and we'll see you again soon.